Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, for Friday, September 27th, 2024. It's good to be back. We missed last week. I was doing some traveling. In fact, I just got in last night. I'm a little bit sluggish, still sort of catching up, jet lagged a bit. I was vacationing outside of the country, had a great time. I think this video will be as much for me as it is for anyone else this week, as I'm brushing up on all of the action that took place. But of course, the big story last week was 50 basis point Fed cut, which we didn't get to do a video on, but that's in the past. We move on to some news stories here, and China, I think, was the big one this week. So they came in with, I guess I'd call it surprise stimulus here, both for the property markets over there, but just really the economy overall. And that just fueled a big kind of breakout rotation, momentum chase move, a squeeze really across Chinese stocks, and really sort of spilling over into even material stocks here in the US, industrials as well, all sort of catching this little bit of a tailwind right here for the Chinese stimulus trade coming through. We also have the dollar, which is trading in a pretty tight range, getting a little bit tighter here, moving sideways. We're going to check in on that. Russell 2000, the technical starting to get a little bit more firm here as it gets back up towards the top of its year-to-date range. Same goes for Bitcoin. So Bitcoin has been kind of quietly drifting up here. I think it's going a little bit stealth under the radar, under people's hoods. And of course, now we've got one of the big econ reports coming out next Friday. It's the jobs report. Stick around. Let's get into it. All right, we are back. We've got some charts in front of us. TC2000, Warden TC2000, that's a charting platform we're using throughout this video. It's a platform we support here at the Trade Risk as well. If you're a new user, check out the referral link we have to TC2000 in the description of this video. Then you can check out our website. We've got lots of cool downloads, indicators, layouts, some of the things you'll see throughout this video available for download. You can also work with me, build something custom if you'd like for TC2000. So check that out at thetraderisk.com. Now let's get into the data this week. So 1 week returns here. You can see mixed, but mostly positive here. So the Dow is up 0.5%. So was the S&P, and the Nasdaq was the leader this week, up a little over 1%. It was really just the Russell 2000 down 0.5%. 1 month returns, all pretty even race here across the US averages, 1 to 3% over the last 4 weeks of trading. Volatility this week is kind of sitting at a average level. I don't know, slightly above average. I mean, we're going in to the weekend here at 16.88 in the VIX. It's up a little bit less than a point this week. So, there's a little bit of perhaps anxiety out there. We've got the elections now, which are just 38 days away. And, we're getting a little bit closer to a volatility event, right? Where there's some uncertainty. There's a great deal of uncertainty in terms of what the outcome is going to be. And that perhaps is reflected here in the upper teens VIX. Let's move on to sectors here. As we talked about at the top of the show, materials were the top performer this week, up 3%. Again, likely on the heels of that sort of China stimulus trade rippling through really world stock markets at this point. Consumer discretionary and communication services round out the top three. On the downside, energy, healthcare, and financials all were down about 1% to 1.5% or so. Energy still in a tough spot here as crude oil struggles to find a little bit of a floor. Now, if we look at our sector trends, you can see that there are some mixed signals here. Or certainly it's a stock picker's market. Let's maybe call it that. Technology is starting to get its mojo back. Communication services, right? We've got a lot of green dots, consistent green dots now for the last couple of weeks. You do have the energy trade kind of breaking down, or that energy sector. That's not anything new. It's been basically down to sideways or down and choppy for the better part of the last 5 months. And that continues this week with a fresh sell signal printed on Friday. You also have biotech starting to roll back over. So this has gotten a little bit weaker. Healthcare's gotten weaker. Financials is getting a little more choppy. So there are some things here now that are hitting a little bit of some turbulence as we look across our sector trends here. These trends, by the way, this is one of the custom indicators we have built for TC2000. It's also available for TradingView on our website, but this is measuring price, volume, spanning across time with some price action relationships. Now, let's take a little bit of a closer look here at market breadth. And I think there is still plenty to like, despite some of the sectors there getting a little bit bumpy. If we just zoom out and take a look here at the number of stocks hitting 52-week highs, the number of stocks hitting 52-week lows, this ratio is still very much in the bull camp here, or bull favor, in terms of a lot more stocks are hitting 52-week highs. I think that's exactly what we want to see to keep us excited or participating or glass half full in this market. I think you got to still pick your stocks and pick your spots, but generally speaking, this shows support is still underneath the hood, and we are still getting a good outpacing here of stocks hitting 52-week highs. So that is nice to see. Now let's take a quick pit stop here. Investors Business Daily, they do sponsor this show. So thank you, IBD. This is their top 10 of their IBD 50. So this is their ranked top 10 list of their IBD 50 list. You can see a mixed week here for the performance of these stocks. Some of these stocks are pretty huge over the last year or so. And, you can see, of course, just the big earnings and fundamental kind of backdrop here on those stocks. So if you want to get access to their digital subscription, it's a very nominal fee on a monthly basis. You get access to their IBD 50, which updates every day. You get access to a lot more online articles and stock lists. Use the link in the description of this video. You can support IBD, support the show here at the Trade Risk. Now, if we move on to our stock market weekly macro slide, this is a new one that we sort of updated a few weeks ago, but really we're looking at the two big macro factors here. We're looking at the US dollar, which, like we talked about at the top of the show, has been moving a lot more kind of sideways, or really going nowhere. Lack of movement is really the best way to describe it. We still have a series of lower lows, lower highs in place here. So we've got a, kind of medium-term downtrend here for the dollar, but it's certainly fueling up for perhaps a bigger move or, some type of vol event coming up in the next week or two. So let's keep an eye on that. Meanwhile, if we look at interest rates down here in the bottom right, you still have the 10-year treasury yield. You still have yields kind of moving down. They did kind of reflex bounce over the last week or two, but again, still have that series of lower lows and lower highs in. Now, in terms of commodities themselves, copper, Bitcoin, silver, gold, all doing well this week, up 1 to 5%. That's really just crude oil, which is standing out there. I don't know if that's more of a supply side issue with OPEC and just a lot more fuel coming to market, or if that is recessionary sort of demand fears there. So that one is still a little bit tricky. USO is still struggling to catch its footing. So let's get into some of the individual stocks, or let's actually get into the majors here. So we're going to start it off with the S&P 500. Let's take a look at the weekly chart, and you can see that there's certainly a lot to like in the S&P 500 here. We're trading at all-time highs, right? All-time weekly closing highs this week, 57.38. We didn't close at the highs of the intra-week range, but we certainly still made ground to the upside. We're three weeks up in a row, and we did recently, last week, break out and take out the July highs. So bulls clearly in control here on multiple time frames, basically trading just at all-time highs. If you look a little bit more medium term here, or a little more short term, I guess I should say, over the last five, six trading sessions, you can see that we do have a little more of kind of compression in range, a little bit of a sluggish type of action here. We're opening up towards the highs of the sessions. We are closing on the lower end, or at least not able to hold on to all of the gains over the last handful of days. So there's perhaps, just some signs here that the market's a little bit sluggish. As the saying goes, be careful or be warned of shorting a dull market here. It does feel a bit dull, even though there was a good amount of news out this week, and we do have markets up at highs, and the VIX is up at 17. It still feels a little bit precarious here, where it's kind of luring in some shorts perhaps. And I think you just got to be a little bit careful on that. I think this line in the sand right here will serve well for risk managing this market, or perhaps, your sign to get more bearish on this market is if we start to break below, conservatively, I guess you could use 5,700, but really this 5,672 area, which was approximately the July highs, I think that's just a great line in the sand here. Call it a stop loss, call it a, you know, place to sort of take notice or switch gears. But this is kind of where I would be watching closely to see if the S&P 500 can continue to hold above this area, because if it does, I think that this is a difficult proposition to want to be short this market aggressively if we're holding, you know, pretty much up here at all-time highs above the July highs and above 5670, let's call it. If we start losing this area, if we start to see some vol expansion next week, some election jitters, or, you know, some other event that really starts to throw a wrench into this trend, then watch to see if this breaks down below that area. And if it does, then you have a more technical kind of tighter stop you can risk manage against, and it gives you some more causality to perhaps short. But right now, I mean, the bulls are in control here. We're a little bit sluggish, like I say, in the short term, just in some of this price action here. Just looks like it's grinding, it's digesting, it's sort of turning over. But I still don't feel super, you know, rosy on trying to short anything like this. So if we throw on Bollinger Bands, they're expanding up. We're trading just off of highs. We've had a good 3-week run to the upside. So yes, there is perhaps some reason to want to take a pause, but I think the trends, you got to respect them right now. And the S&P 500 is in a positive trend on multiple time frames. Now the Nasdaq 100, if we take a look here, I mean, you've got a slightly different picture, right? This is not at all-time highs. In fact, what happened here on Thursday really was it filled this big gap all the way back here. So if you recall, this gap down that never really got filled from the 16th, 17th of July, that got filled. We opened basically at the highs on Thursday of the week, and then we sort of faded down on Thursday. And then we opened up a little bit on Friday, and we faded throughout Friday's session. So again, we've got some sluggish price action here where intraday buyers really aren't continuing to come in and bid aggressively and move the range to the upside. It's really these overnight kind of gaps, and then it's digesting, and maybe some sellers are coming in. So technology, again, QQQ relative to SPY still shows that underperformance. We're not above the July highs here. If we look on the year, we're up, you know, call it 19% for the QQQ, 20% for the SPY. I mean, it's a blockbuster year. I think you really got to be happy with the performance of the stock market thus far. But the Qs here continue to notably lag on a relative basis over the last 3 or 4 months or so. That relationship continues. Again, you still have a medium-term uptrend in place. I think you're just really kind of sandwiched here in this range. And again, I wouldn't be surprised to see us just move sideways here throughout the election, or into the election, let's call it. You know, call it 504 to 424, which is, I mean, a huge range. But you know, just the market moving comfortably sideways here, chopping around, grinding around, that kind of makes some sense here. So Q's doing its thing. The Russell 2000, you know, it did get faded on Friday, but I still like the setup here, you know, kind of the most now out of all the of all the majors. I mean, look, the S&P, again, it's trading just off high, so it's tough not to like. But I think you get perhaps a little more upside bang for your buck here in the Russell 2000. Potentially, right? We're still got to wait for the signal. We still got to wait for some more all clear signs, or for some more momentum to kind of step in here. But it definitely, you know, looks like buyers are trying to put in a higher low here on Wednesday's lows session, right around 217 or so. We did get a little bit of a move up. I mean, I will say, take a look at these bars. I think the Russell 2000 kind of illustrates the point I was, you know, sort of alluding to with the S&P is, you know, we're opening high, closing low, opening high, closing low. So, I mean, that is taking place here. And so it is, you know, it's a short-term kind of notable pause or reluctance, or just, you know, understanding that there are some sellers kind of coming in here throughout these sessions and sort of taking a little bit of that momentum out of the market. But if we zoom out here, right, and go on a weekly basis, I mean, we're above our key 210 area, which is where we've been talking about for quite some time, the longer actionable kind of top end of this range, low end of the range from 2021. And you can see we're holding above that. We're 2 weeks up in a row now. We printed an inside week here this week. We're just underneath the cycle highs here. So it's worth paying attention to, right? It's worth paying attention to see really, you know, a couple of different levels you could look at. I mean, honestly, you could argue that it broke this downtrend line on Friday, just didn't have a great close. So maybe maybe you put on some exposure here on this breakout on Friday, but you're not loving the close, of course. And if you want to be a little more conservative, then, you know, you're really looking for a break over 225 to get this breakout, this new daily, year-to-date close, and off to the races we go if we start clearing over 225. So that's something to just have on the old alerts list there. 225 in the Russell 2000. That looks like go time. Again, elections 38 days away. Not sure if we get the breakouts before then, but it's something to be anticipating and prepared for. You don't want to ever be caught flat-footed. So that's the roundup there on the majors. Let's take a look at the dollar index real quick. You can see this is that tight range I was talking about here. It's, been in a series of lower lows, lower highs, but it is now kind of range bound here, and be interesting to see if this is getting ready to leg down and continue lower. If it is, then that's probably a good thing for equity markets. Generally speaking, that probably coincides with lower yields as well. That coincides with perhaps that Russell 2000 breakout. So keep an eye on all these things. Everything is linked, of course. Dollar index is, a big factor there. So that's the dollar. What else did I want to talk about today? Oh, yes, of course, China. China was the big story, I think. Look at this move here in KWEB. So this is the internet ETF here for China. Look at the dollar volume coming in. I mean, it's pretty much off the charts here. If we go to a weekly chart, again, it's pretty much off the charts. And it was a huge week here, 26% for KWEB. If we go to FXI, it was up 19%. Dollar volume here off the charts as well. And this is the type of kind of real bottom thrust here that, puts in longer term bottoms. Now, again, it's really tough to chase this 1 week when, after a 1 week move of such magnitude. But I think longer term holistically here, if China has truly bottomed, then this perhaps has, several innings to sort of play itself out if this continues. Now, FXI, again, you could argue that this, again, is sort of the higher high that just came in, or a higher low that just came in off of the January levels. So we had kind of this low in January, right? We had a nice move up off of it. Then we consolidated and pulled back. And now we just got a nice kind of punch through and a higher high taking out this level. So FXI, KWEB, right? You can go right into the individual tickers as well. Look at KWEB here. This really never made a new low in earlier this year below the 2022 area. This had a nice little relative strength pocket. And if we look at names like Alibaba, of course, you can see this is a big beneficiary. You could see PDD. You can look at Tencent, which TCE, that one always confuses me, Tencent Holdings breaking out here. So just lots of mojo here in the China trade, which again bodes well for lots of these stocks, and we'll see if they can hold that momentum here over the next couple of weeks. So that was the big story there. I also want to talk about just rounding out the China trade, XLB. So materials, like we talked about, best performing sector this week. You can see on a weekly basis, we just got a nice breakout here, pushing to fresh new highs. So that was nice to see for XLB. Let's take a look at Bitcoin. So we'll wrap up here. Bitcoin, again, kind of silently moving back up here. I don't see as much chatter about it. It's made a bit of a grind to move here from 53,000 up to about 65,000 for the spot price. We are still in this holding pattern, so we haven't really technically broke out of any of these longer kind of consolidation that this has been in basically all year long, but it's worth paying attention to now as it gets towards the top of this range. If you look at the IBIT on the right-hand side, you can see similar behavior. I mean, this really has got to get above, if we're looking at the IBIT, over $40, $41, if you want to be a little more conservative, to really get that bigger weekly, monthly kind of breakouts in motion here. So if you look at a weekly time frame, you've just got potentially this big bull flag developing here. If you go to a monthly time frame, I mean, this looks even more picture perfect here. As you can see, the month, which is not quite over yet, but it's pretty close, is potentially going to be the first month we're going to close over last month's well, highs. It's got a little more work to do. It's got to stay over 65,560. So yeah, it's just getting over last week's highs and potentially closing above it. So be nice to see good developments there. We had some fundamental backdrops here this week. So basically we had structural developments or bullish news there with the SEC approval of IBIT options. So it's not listed yet, but that was a big roadblock hurdle for options to be listed here on IBIT. And then of course we also had the New York Mellon Bank, New York Mellon, BNY. That's right. There it is. Getting approval to custody Bitcoin, which I think is also going to be an important step here of just getting Bitcoin more sort of institutionalized and ingrained in sort of more sophisticated products. So all around, some good developments here for Bitcoin. We'll see if that can lead to a technical breakout over the coming weeks. We shall see, but something that our trend positioning here in our Galahad trading system did flip bullish, did initiate a trend position earlier this week. So that's encouraging to see. So we do have long positions here in BTC, and we'll see how that trade plays out. So that, I think, covers just about everything I had on the docket. Again, I'm still catching up myself. Be back in normal speedy action here, hopefully next week. Hope you had a good week of trading here. September's wrapping up. We're quickly going into October, and then it's the countdown on the election. So fun times ahead. Hopefully everybody's doing well out there. Good to be back. Thanks for tuning in. We've got links in the description of this video, and we'll see you back here next Friday. Take care.